Good afternoon. Stratton Mortgage here again, season 1, episode 7. 7 weeks, guys.
I
I've done
know,
it 7
right?
times now.
You look like a professional.
It is
Tom.
fun.
How many episodes is season 1? Did we determine that?
It's going to be 52.
Yeah.
52. So let's go along with our routines here. Introduction. I'm Tom Christie.
Bill Seach.
Trey Reedy.
Adam Baumline.
So we're going to keep it a little simpler today than coming out with the 3 topics and just really kind of hone in on one particular one because it's been something we've had to deal with several times this week already, which is gift funds and down payments. I want to start. I just ran into a scenario today. I have a client trying to relocate here from North Carolina. A gift fund from his parents would have been completely fine, and there's a different way of doing that, conventional FHA. But in this case, his parents did not want to do it as a gift and in turn said, we're going to give you a loan. That, however, is not okay. Anytime you're getting money, it's got to be considered to be secured. In this case, it would be considered unsecured. So therefore, the loan from his parents cannot be used as his down payment.
Because he just borrowed cash itself.
Well, it does anything. I mean, cash or check, whatever it is. But it'd be now had he, again, maybe if he had a car that was paid off and decided to do a cash out refinance on that car, well, that would be secured because there's something as collateral there. In this case, there is no collateral. So, if somebody's trying to do a gift and it's your best served to get it in the form of a gift and not a loan.
Literally a gift.
So
Yes.
what was the reasoning that they did not want to do a gift? Like,
There's they had personal reasons. Like I'm not certain. I'm certain it had to do with taxes. But
well, they
You
wanted
just
the money
can't-
back. I know, right? Yeah.
Yeah.
well, I mean, it's their kids, and they, their rate they even did for them was like at 2%. I mean, it's next to nothing. They're not trying to make money off their child. It's just they're extremely by the book, which again is completely fine. But I think that they're
Heard of in this
misunderstanding about how getting a gift. It's that's John and I were talking. The parents have already been taxed on that. I don't know how they'd be taxed again giving money to their son. But again, it is what it is. And they have a loan from their parents. It's been notarized. And because it is considered a loan and they're unwilling to consider it an actual gift to their child, that it's now no longer able to be used as a down payment.
Right. And that was a big number, wasn't it? Wasn't it like a big
It was $150,000.
Yeah.
So,
Wow.
and again, that $150,000 could have been a gift. Had it been considered an actual gift,
So
they would have been fine.
yeah. So this brings us to, again, using a broker instead of a bank. The bank would say, no, you can't do it and turn you down probably, where we have to figure something out. So what are we going to do to figure that out?
Yeah. So and they did. They went and Key Bank was a bank. They said, hey, you just got to be in there for 60 days. And the reason they're saying that is because they're going to go off a 2-month bank history. And so with that 2-month bank history, like by the time they get to it, that large deposit's not going to be seen any longer. So they can just look at it as cash in his bank.
Yeah, just sourced funds.
Yep, that's the seasoning part of it there. So that's that's Key Bank's way around it, and they don't have any other options. However, our little trick around this is say, okay, well, you take your $150,000 loan you get from parents, factor it in the debt ratio because he did get the money.
Sure.
But now he uses his own money, do little money down, just get into the house, and then after the loan, gets set up with the lender and everything, he can then take that $150,000, apply all of that towards the mortgage, and he does what's called a recast.
Yeah.
And what that does is basically takes the loan that he already has and decreases his principal balance by that $150,000 and refigures that payment as if he put $150,000 down. That's the loophole around the whole loan thing.
So what's our original loan amount going to be? Is it like 200, 300, 400?
Well, he's putting minimum down, whatever, how much money he actually had, 3%,
Right.
well, 3.5% if he's on FHA.
Well, just to explain for the people
Yeah,
who's
so
listening.
I mean, he could do as little as 3% down. I mean, he's looking at buying a $500,000 house. So, in that case, with 3%, that still keeps him below the loan limit there. But like I said, that then I told him, hey, just take that and back out the down, the money that your dad gave you, and then put the rest down as far as doing a recast.
Right.
It's no different as if you brought it all down to day one. So, but again, back to your point is just having options to look a little deeper into things and saying, nope, can't do it. You got to wait 60 days. In this guy's case, he can't wait 60 days. He's
Right.
relocating from North Carolina to Columbus, has a job at Mount Carmel, and he's got to be here in 45 days. He cannot wait 60 days.
So there's two now. Obviously, that scenario has a pretty large down payment, but there's also several grant programs that we have too. So depending on the situation and what they're getting for a gift or what they're not getting for a gift, we could do potentially one of the grant programs to get them in the home. Look at something like that. So we've done that, or the 1% down program. Depending on the borrower in the scenario, obviously that scenario is not going to work for that because
it's options,
income limit. But
That's
there's options that we would have, and if you, typically from what we've seen, I think most people getting gift funds, it's not to that amount.
No.
It's not to that purchase price range, right?
Yeah.
It's somebody that would fit into the
It's
mold.
actually a first, yeah.
Yeah, for one of those programs.
All right.
So there are some other potential grant programs or things that we can offer that would also bridge that gap, for the down payment. So that would be good.
Have you done the grant one with the FHA where there's no down payment at all? Because I was talking
With Lane Home
I was
Financial?
talking, I was talking to Lisa, and she's like,
Yep.
I have a customer get back $100 at closing.
Yep.
That's crazy.
If they get seller paid closing costs, they will cover their down payment, and seller can pay the rest.
They just have to live there. They have to keep that loan for 3 years to forgive that. It's like a form of a second, kind of like the
it's
OFA thing, but
it's
okay.
a second lien that doesn't have a payment on it that prorates itself away over time.
forgivable.
It's forgivable, yeah.
Right.
Yeah. So if you went to sell the home, and somehow there was equity there within the first 3 years, then you would have to you'd have to pay that money back out of the equity that was there, basically.
Right.
But most people are going to be in a house
But
for
most
3
people,
years.
if you're in that program, more than likely you're not.
Looking to bounce houses every year.
Yeah, I don't think we had any. Well, at least I can't think of any borrowers that did 1% down with United Wholesale that sold or refund. I mean, they're all still in their home,
Right.
So, and that was we're in 2 years on that. So
People taking advantage of that program are typically they're in there for several years, just looking forward to establishing that property as their residence.
Is that just to keep people from kind of doing it even though they don't need to, and then making money off the
probably,
property?
yeah. I mean, because they're basically giving them money. I mean, you wouldn't. I'm sure somebody could find a way to finagle. Go buy a property down in an up and coming area in Old Town East or something, below market. Use the grant to buy it, fix it up, then go sell it and make. I don't know. I'm picking a number, $15,000 or something. Well,
because if you did do that in theory, you're not really. It's not like you're paying extra because you didn't have to put that down to begin with. Like they gave it to you as a down payment.
Yeah, you just
anyway,
wouldn't keep that.
Yeah, it just wouldn't be the
you'd have
free
to
money
pay
at
that
that
back.
point.
Yeah,
So,
you'd
but
have to
after
pay that back.
3 to 4 years, whatever that is, and it really turns into that free money.
Yeah,
It's
equity.
essentially.
Yeah.
So then so that's obviously that didn't work for the down payment assistance thing. Sorry about the static, but talking about like what can you do for gift funds so people know if, we have the acceptable sources of gifts and things like that. Who can it be from? You guys, I mean, we all talked about it, but let's let our viewers know too,
You can run down that list. So, yeah. Obviously, if an immediate family member would be okay.
Immediate family members, they actually took cousins out of there, believe it or not. It said no cousins on the HUD thing.
Mm.
But mother-in-law, sister-in-law, brother-in-law, stepbrothers, stepsisters, parents, spouses.
Can you get one from your employer? I think you can get one.
You can. I've done that. I've used a gift fund from an employer before.
Yeah.
That was just it was you and I had a loan together through our system from the last team. We did one.
Yeah, that's right.
He got it from his employer, and again, it was simple enough to get. I really wasn't.
I remember
He
that.
was
now. I
fortunate to
forgot
have an
about
employer do that for him. That's for sure. But
that. Yeah, that was nice.
Domestic partners.
There you go.
I
Yeah.
saw something just kind of reading through this stuff, educating myself even on this, that even if somebody can show proof that somebody's lived together for a year, that might be like through Freddie that was saying that
I
was
had the
acceptable.
gift. I think I had one of the gift funds where they were boyfriend girlfriend living together.
You had to use the
I
Facebook page to
I
show proof
printed
that
out
they
the
lived
Facebook
together.
page to show that they were
Boyfriend girlfriend.
actually or maybe they were engaged. Maybe it was engaged.
The long-term thing.
Yeah, it was a long-term relationship. You had to
Right.
prove a long-term relationship. So they had a lease together. They had the utility bills were together, things like that. I don't think they were on the same bank account, but the other. I mean, it was It made
We had
sense.
enough information to show
Yeah,
it.
you could tell they definitely
They're
were
together.
They had to be more than Facebook official.
yeah, exactly.
That's Facebook official.
It's not
Buying a
official.
house, let's get Facebook official
It's
real
not
quick.
official until it's on Facebook, right?
Yeah.
So I got one right now where the couple lives together, but they're not married yet, but they have a child together. So Vicky told me to go ahead and get the birth certificate for the child because both parents.
Well,
are
yeah,
married.
it's
Yeah.
their parents. Yeah. I mean,
And that proves the relationship of time, over time or whatever.
But just 'cause-
you would think.
Yeah.
And that's why I think that one of the biggest things with being a wholesale is these underwriters want these loans to close. Like everybody's looking at these from an angle, like how can we get to close? Like they want these loans to close. So that's and they're going to come up with solutions and work with us to help get a loan closed. And if it can't,
That's a huge point, because there are sometimes it almost seems like, and occasionally we'll see it with lender on our side. Of course, we don't work with them anymore, but it almost seems like they're trying to find a way not to approve the loan. Like they're always looking for something that's wrong versus it seems like the underwriters that we work with are trying to find a way. Hey, do they have somebody that can give of gift funds? There's a million different scenarios, but it seems like we've been asked questions and sometimes you're like, what? And then you realize, the underwriter's actually literally trying to help me close the file. Maybe something you didn't think about.
Yeah.
You got a lot of loans going on or a lot of people pre-qualified, and sometimes something just doesn't pop in your head right away. Literally the lending team is there trying to help you or help the borrower get it done. Sometimes it's us or sometimes it's them, but that kind of goes in a little bit to the one I just closed yesterday.
Yeah.
With that problem, and that also goes what we were talking about with gift funds. So that loan scenario, borrowers came to me, pre-qualified them, and one of them was getting a bonus from work, which was going during the process of the transaction, which was going to complete the down payment. Okay, it was an annual bonus. He gets it every year. It's consistent. Okay, fine. Well, he didn't get the bonus. So they then went and got gift funds from their aunt. Okay, gift funds are okay. Now, here's where it kind of got a little bit tricky. So when we reviewed them and they never mentioned anything about getting gift funds and literally essentially had their own money, we qualified them or took them to a lender where the interest rate was literally 1 percentage point in rate lower than what they qualified for at any other lender. Meaning they got a much lower payment because this is a $200,000 purchase, I think. So big difference in the payment, right?
that's-
Well, now it becomes we got to find another way to get money, or we have to entirely switch your loan to a different lender with a different interest rate and close in 2 weeks, which we can do, but it's stressful.
lot.
It's a
Yeah.
lot of work. We started looking at it. Some of it was me looking at it and saying, okay, hey, you know what? They have another payroll deposit hitting, at the end of the month. We can use that. And then the lender looking at it a little bit and saying, hey, we can lower the interest rate down. And they didn't charge them for it. I mean, it wasn't on the final closing disclosure, so they must have given me a credit or something. But so putting those two things together, now we got the rate low enough to where the debt-to-income ratio was working out because they had gotten an exception to not have the gift funds. And then them getting or him having the money in his account that I saw literally made it just enough to where they qualified. But thank God, because otherwise they would have had to do a loan that had an interest rate of, they still could have closed, but that's 1% higher in the interest rate. That's a big deal.
Yeah.
So from like 4.5 to 5.5.
It was
Yeah.
4.65, and then with where their scores are at, they would have been 5.75.
And it may have been easier to get the loan done through somewhere else, but the job was get them the best rate. If that meant just even a little bit more work to do something to make sure it got done, that's what had to happen, and that's what you delivered on.
Well, that's and again, and that if anybody's listened to our previous podcast about being prepared, that was never mentioned. That was never really something that came up. Hey, I get this annual bonus every year. Like clockwork. Okay, that's what we're going to use. Sometimes you'd want somebody to wait to see their money in their account. They found a home they really liked. It's before the buying season. They wanted to jump on it. Rates are good, especially in their case, based on credit score. So they kind of had to move forward, you know, and it kind of puts you in that weird spot. So we could have gotten it done regardless, but I'm glad we were able to get it done the way that it was because it saved every time. In fact, that, you know, I think I told you guys, like, the seller is a lender that I know, you know, so that made it a little bit easier because I could explain to him what's going on and he understands the process. But that doesn't mean he's not nervous as a seller.
Yeah.
It's like, oh man, you know, what's going to happen? I don't know. Am I going to have to put my home back on the market? You know, I mean, those are natural reactions to that process. And that's somebody who's in the industry. So
Yeah.
Cool.
yeah. So we got it done.
That's all that matters.
Yeah. Didn't sleep for about 4 days. I only ate a cookie, I think, in 3 days, and
Yeah.
got more
Didn't
gray
you
hair.
put a hole in the wall in there?
Yeah. Got to get the drywall team in here.
Yeah.
The things that we go through sometimes that just doesn't get seen or heard about. That's just comes from passion and trying to make sure that we deliver, not let anybody down.
Oh, we care, you know. I mean, we do.
Yeah, we didn't. You turned it down and moved on to the next one, and well, it's yeah.
Yeah, that's
Find it.
I very
There's so
easily
many
could have
people-
done that.
yeah,
Said, you know what?
A lot of people have done that.
Yeah,
It's-
they don't qualify. They don't move on. You know,
Yeah,
we got to
not wasting
redo this
my
whole
time.
thing. I need another. You know, I could even go. I need another 30 days, which I didn't need. But you know, if they had to redo everything, but
Yeah.
I didn't do any of that. So
Sure.
So yeah, I mean, with the down payments is just again always just being upfront, and again just that, like you said, being prepared of just having that stuff ready to go. Just to, no one wants to be sucker punched. I mean, and it's just.
Well, I'm
and
sure
so-
he didn't know.
Surprises.
well, that's the
Well,
thing.
yeah,
They didn't
it's-
know. You know what I mean? And that just that's one of them. That was literally a scenario where you know they don't know. They're a first time home buyer. They're not going to know that. But luckily, with our experience, ways to figure everything out, and or technically having those backup options, you know what I mean? Like, they did qualify. I mean, that was a closable loan at
Anywhere, basically.
15 or
Yeah.
20, you know, lenders that we work with. It was a matter of choosing the lender that has the best interest rate because that gave they're a first time home buyer. That gave them the best payment. Why, you know, why would we want
Again, broker.
to?
Right?
Yeah. So
And just to say, that score was less than 500 too, wasn't it? Or less,
500, no.
less than
Less
600.
yeah, so it was one of the lower tiers on FHA, but I
Yeah.
mean it's not indicative of you know anything. It's just you know sometimes a newer borrower doesn't have as much credit depth. The score is not going to be as high as
The thing
somebody
is, we
who
can
has
do
that.
them. That they said those. Some people don't think I just don't have the credit score. Or, what I find a lot of people thinking they need 20% down, and that's just not the case. I mean, with one of our primary wholesale lenders now. I mean, you can do this on a conventional with little as 3% down, whether it's a gift or your own funds. And through a couple of those products, they're still doing appraisal reimbursements. You know,
Yeah, through what, June, I think?
Yeah, and I just closed a loan last week where we got the appraisal reimbursement back, and they got another credit back because there was an overage on the rate. So like our cost as a company was a negative. We gave them money to do that loan when it was all said and done. They still have their title costs, their homeowners insurance, but the financing part of it from that aspect
That saves them a
was
bunch of money.
negative dollars, and they're bringing 3% down. So they actually walked out of that closing with less than 3% out of their pocket while still having 3% equity position.
So you kind of touch on something there too, and I know we're talking about gift funds, and this is not off topic, but you know, you're getting gift fund, you're saving up for a down payment, right? Or you're getting gift funds from a family member, you know, and you're getting X amount of dollars. Well, more than likely, that's not an unlimited bucket. You can't just, hey, I'm going to give you a number and you give it to me, right? There's probably a limit as to what they can give. So your closing costs do come into play. So like you said, we didn't have an underwriting fee, you know, in that particular case. That with us, that's a $700 to $900 savings depending on the lender.
Mm-hmm.
From a retail lender, that could be a $1,500 savings
Oh, and then the rate alone.
in the underwriting fee. So not only are you saving $1,500 cash, you're getting a lower rate, and you said appraisal reimbursement. Now you're getting another $480, depending on where it's at, roughly $480 back for the appraisal that you would have spent with the other lender.
Mm-hmm.
So you're at $2,000
right now.
Maybe you couldn't get. Maybe they need $5,500 closing costs. You don't need that, and that's a number that realtors will tell me a lot.
Yeah.
You don't need that with us. You're much lower than that. You know, you're closer to $3,000, $3,500, depending on what your homeowner's insurance premium is for the year. So that's a big key for borrowers listening or potential buyers listening. You're trying to save up all this money. Yeah, it's hard, and you're saving it and you're doing it. Well, if you're working with somebody who's charging $1,500 underwriting fee and you're paying this and that, it's a higher rate. It's going to take you longer to get there. You don't need to do that. It's cheaper for you than what you may realize.
And that's exactly what you just said. This is cheaper and easier than what I had been expecting. And people hear stories like, I heard this was going to be tough. And again, when I left out that closing, it was like I thought for sure there was more to do. I could barely even talk to her. Got a driver's license. I mean, it was that easy for her to get done. And again, these are some that are really tough. But again, those people are prepared. Everybody knows what's going to happen.
Yeah, but we're trying to make it as easy as we can because you still have work.
Life,
and
life,
if you've
family.
got children or pets, there's a million things that somebody can have going on.
Yeah,
you
don't want to go home and spend another 5 hours working on your lawn. That's not what we're doing.
No, be done working. So, anything else?
It's almost St. Patrick's Day. Where are you guys gonna go?
All right. I didn't even realize that, man.
March Madness.
All right.
That's always a fun time of year.
March Madness. Yeah.
There's a lot of Browns fans out there happy right now.
Oh, yeah. How about that?
Oh, Browns had to come up big time.
I heard somebody talking at lunch the Browns are going to win the division. I was like, come on, man.
There's already someone who has planned a Super Bowl party for the Browns for next year.
Oh, for sure. For sure.
Vegas has them the favorite to win that division right now.
Really?
Over Pittsburgh and the Ravens and the lowly Bengals will be down there. The
Bengals got a new coach, man.
Yeah. Same quarterback, though.
Right.
Yeah. Throw the ball in the stands.
Just not to the other team.
Section 101 is not open, sir. Stop throwing it there.
Might get a souvenir.
Anyways, everybody have a good, safe St. Patrick's weekend.
Yeah,
Happy
absolutely.
St. Patty's Day, everybody, and until next week.
We'll see you.
Take care.